I wasn't planning to film this, but sometimes you stumble onto something in the market that forces you to hit the record button. And that happened this week. I found a stock trading for $4.79 that sits right at the center of one of the most important revolutions happening in medicine today. A company that provides technology used across breakthrough cancer research, immunotherapy, personalized medicine, and drug development. And most people, retail investors especially, have no idea it exists. Meanwhile, Wall Street does. Analysts already have noticeably higher price targets on it. Institutions have started taking positions, and the company just reported one of the strongest quarters in the history of one of its most important revenue streams. We're talking about a business with over $260 million in cash, zero debt, expanding margins, and a product suite locked into a sector growing faster than nearly every other area in healthcare. But here's the real reason this grabbed my attention. This isn't some side niche. This company is part of the core infrastructure for modern biological research. Every major pharma company, every top lab, every major hospital depends on this technology. And yet, the stock is still undiscovered by most everyday investors. The technology we're talking about is flow cytometry. If you've never heard of it, don't worry. Most people haven't. But it's one of the most important tools in modern biomedical science. In simple terms, it allows researchers to analyze cells one at a time, thousands of them per second, and determine what's happening inside each cell with remarkable precision. Think of it like replacing an old, slow microscope with a high-speed, high-resolution scanner that can see everything happening in real time. If you're developing cancer treatments, autoimmune therapies, vaccines, gene therapies, or personalized medicine, you need flow cytometry, not as an option, as the foundation. That's why the demand for this technology is accelerating everywhere. The flow cytometry market is worth around $6 billion today, and in just a few years it's projected to grow toward $10 billion. And that's only the specific segment. If you step back to the broader life sciences tools market, the hardware, the software, the analytics, it's a massive $170 billion sector growing toward the $300 billion range over the coming years. This isn't a trend. This is infrastructure growth. The same way cloud computing became an unavoidable backbone for the tech world, advanced cell analysis tools are becoming the backbone of the next generation of medicine. Why is the demand so strong? There are 5 major forces driving it, and each one is massive on its own. The first is the evolution of cancer treatment. Nearly 2 million new cases are diagnosed in the US every year, and treatments have shifted dramatically. We're moving from traditional chemotherapy toward precision-based immunotherapy, targeted drugs, and cell-based therapies like CAR-T. All of these require extremely precise cell analysis. Before treatment, during treatment, after treatment, flow cytometry is the tool enabling that. The second force is personalized medicine. For decades, medicine operated on the idea that one treatment fits most people. That era is ending. Doctors now want to tailor treatments to a person's specific biology. That requires analyzing that biology, which again requires flow cytometry. The third force is the surge in global pharma research spending. Venture capital funding into biotech has exploded. Large pharmaceutical companies are committing billions annually to developing new therapies. The NIH alone puts tens of billions into research every year. When research expands, the demand for tools expands, and flow cytometry sits right at the center. The fourth force is automation and AI. Labs now want automated systems that can process high volumes of samples with minimal human error. AI can analyze those samples, but it needs extremely high-quality data to learn from. And that's exactly what this technology provides. The fifth is something not everyone realizes. Once a lab buys one of these machines, they rarely switch. These instruments cost anywhere from $200,000 to $500,000 each. They're deeply integrated into workflows, and the consumables, the reagents, the software, the service contracts, create recurring revenue for years. This creates a razor and blades model. The instrument is the razor, the consumables are the blades. When you zoom in on where the most money is spent globally, the US controls roughly 40% of the entire global market. Boston, San Diego, San Francisco, Research Triangle. All major hubs moving billions into this kind of research, and US companies lead the space, which gives them a natural competitive advantage. Most importantly, this isn't like consumer spending that fluctuates with economic uncertainty. In 2008 and 2020, when massive parts of the economy slowed, life sciences tools held remarkably steady because research doesn't stop. Drug development doesn't pause. Cancer patients don't say, "Let's wait another year." This sector has durability. Now that you understand the industry wave behind this entire space, let's talk about the company riding that wave in a very interesting position. Cytek Biosciences, ticker CTKB. This is a company that's been around for over 30 years. They went public in 2021. And unlike many young biotech-adjacent companies, they're not burning through debt. They're sitting on over $260 million in cash. Zero debt. And they've installed over 3,500 instruments around the world, with 160 added just last quarter alone. But what makes this company stand out is their proprietary technology called full spectrum profiling. Traditional flow cytometry can analyze roughly 10 to 15 biological markers on a cell. At once, Cytek's technology can analyze 30 to 40 markers simultaneously, capturing the entire emission spectrum of each cell rather than a narrow slice. It's like comparing a 15-color crayon box to a 40-color one. Researchers can do more in a single run, see more detail, detect rare cell types, and reduce the number of experiments needed. This is not financial advice. This kind of capability isn't abstract. It's been validated. Researchers have used Cytek's technology in over 2,800 peer-reviewed scientific publications. That's a real-world footprint most companies in this price range simply don't have. So how do they make money? There are three primary engines. First, instrument sales. These are the high-ticket items. They're lumpy, meaning some quarters are big, some are lighter, depending on budgets and purchasing cycles. That's normal. Second, service revenue, maintenance contracts, technical support, software. Third, reagents, the consumables used for running tests. These are high margin and recurring, and this is where the business becomes powerful. Last quarter, reagent revenue grew over 20% year over year, and service revenue grew nearly 20% as well. That's the strongest growth they've ever recorded in those segments. Recurring revenue is what big money looks for. Now you might be asking, are they profitable? On a full-year basis, not yet. But the trend is moving in the right direction. Their net loss has been cut in half. Gross margins have risen to around 59%, approaching the gold standard 60% mark. Adjusted EBITDA is positive. The company even posted a profitable quarter recently. And here's where the stock becomes even more interesting. Since going public, the share price has fallen roughly 80% from its highs, partly due to market conditions, partly due to rising interest rates, which hit biotech and research-adjacent companies especially hard. But the chart shows a very different picture now. A clear accumulation pattern, a clean breakout, surging volume. These are the kinds of signals that historically appear right before early institutional positioning. And here's something most investors overlook. Their competitors are giants, companies hundreds of times their size. But in industries like this, Large companies often move slowly. Smaller specialized players with strong intellectual property, Cytec has over 40 patents, can innovate faster and carve out meaningful share. Everything they sell feeds into a flywheel. More instruments, more consumables, more recurring revenue, more margin expansion, more stability, more future demand.